Hello, welcome back to WINFXTRADING YouTube channel, the channel that has been optimized to make you rich trading the forex and synthetic market. In today's video, we shall discuss meta power of moving average guide and direction in forex synthetic market. Okay, moving averages has been very crucial in the trading industry, but a lot of people are not paying attention to it. Some people don't use it. When you do not use moving average, you will have a lot of error in your signal production and synthesis. You will produce some signals in a wrong form, like you will buy when you're supposed to sell, and you will sell when you're supposed to buy. No matter how strong you are in market structure and price action analysis, you should test moving average. You should test the behavior of the moving averages for you to get the right signal. Okay, so let me continue. Before I continue, if this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the bell notification so you get notified each time I upload a new content. Try to refer this channel to your network. Try to like and share so that YouTube will push us to a high level of audience. Okay, the moving average is a plan that hold price most of time and must be followed. Okay, it has to be combined with price action and market structure for it to be effective. Moving averages do not cause for no reason. It causes when direction will have to change. So when you are trying to produce signal and you are not testing for moving average crossing and how the candlesticks are reacting to those moving averages after the crossing, you are going to make a lot of mistake. I'm going to take you to the MT5 chart so that you see this thing practically and summarize how it works. So this is MT5. Okay, I'm going to open volatility 75.1s. I'm going to go to the indicator chart. I'm going to open volatility 75.1s. Okay, now assuming let us run the structural analysis first on this market. Let us run the structural. I want to produce signal using the moving average as a supporter, as a kind of additional tool, because it's going to eliminate errors of opposition. An opposition error is when you buy when you're supposed to sell, and when you sell when you're supposed to buy. It is because you didn't study the moving averages. That's why you make that mistake. Okay, so right now I will start my analysis from daily time frame. Okay, I'll start my analysis from daily time frame. Now, in the daily time frame, we have this low. This was a low. Price left this low. When price break this low and break this low, so we can say that the market is in uptrend, because instead of making lower lows, is making higher lows and breaking previous lows. It's trading against lows in opposite path. This was a downtrend, so it's trading against the lows and the highs there. So it's now making higher high. We have break of structure here, so it's uptrend. We have break of structure. So in this market, you have to look for buys when the buy is active. Don't buy when it is still selling. You buy when the buy is active. You excuse. You can't buy when it is retracing like this. In uptrend, you only look for buy, but there are times when market is retracing, you don't buy. You either you trade that retracement or you wait for it to die off, okay, which can take some time. Okay, so right now this market, by structure and price action, is buying right now. It's rejected from this level and is buying. Okay, it's buying from here. You see, it's buying. You see the candles. This is hammer. This is two hammers, and then it's printing big candle. Today is bullish, so it's buying. We expect it to come and test this high, either this high or this high. So what I'm doing now is structural analysis and price action analysis. So it's going to buy and reach here. Now, for you to confirm that this buy is really going to happen, you go to the moving average and check. You go to the moving average and check. But the time frame you are going to use is going to be lower time frame. Okay, 30 minutes time frame. Okay, so that you understand what is happening. Now, you see, in the 30 minutes time frame, the market is trading above the moving average. Okay, it's trading above the moving average. This is a sign that buyers are stronger. Okay, but if you look at it analytically, there was a time price was above the moving average, like here, but after some time it went below the moving average. So you need price action to use this. You can't use it alone. So based on price action, you see, there is probability of getting a sell. See this line. There is probability that if price reach this line, it can sell. Okay, I'm going to give another example about how moving average is very, very important. Okay, when you understand price action, moving average will help. Okay, see volatility 51s and 30 minutes time frame. You see how price has been trading above the moving averages. If you study this moving average, there is no way you will sell in this market. Even when you see a sell signal, there's no way you will sell. Why? Because what it keeps doing is to obey the moving average. Is trading above the moving average, and you should look for buys. You see, it dropped from here to here and it's still buying. You just, the moving average and the price action are working together. Okay, now let's study the structure and price action of this market and see how moving average has helped. So you go to volatility 51s. Okay, you notice that here we have this trend line. Price break the trend line. So after this breakout, the next level we are looking at is this level. Okay, price still break that level and is pushing higher. Okay, so the next level we are looking at is this level, and price is going towards that level. That is market structure analysis. Okay, the way markets move in practice is different the way you think about it in textbook. Okay, I'm going to be ending this video. Okay, but try to understand that buyers are in control. Immediately they break out of this point, buyers are in control. What you need to do is to now use the moving average to guide you. Okay, so that you will not start doing the opposite. Some people are selling in this market, which will cause more losses. You only buy in this market. You see, it was a smooth buying market. Okay, and they still buying up till now. Someone can buy here and take profit somewhere here. Okay, thank you and keep coming to WINFX Trading. Bye for now.